every major stock market crash. The stock market crash of 1929 was the worst in history, marking the beginning of the Great Depression. Throughout the 1920s, speculation ran wild, with investors borrowing heavily to buy stocks on margin. When economic growth slowed, confidence dropped, and panic selling began on October 24, 1929, Black Thursday, the sell-off accelerated on October 29th, Black Tuesday, leading to a market collapse. The Dow Jones Industrial Average fell 89% from its peak, dropping from 381 to just 41 points. The crash wiped out fortunes overnight, banks failed, and unemployment skyrocketed. It took 25 years for the market to fully recover, only reaching its previous high in 1954. Black Monday, 1987. On October 19, 1987, the stock market experienced its worst one-day percentage drop in history. The Dow Jones plunged 22.6% in a single day, equivalent to over 500 points at the time, which would be thousands in today's terms. The crash was fueled by a mix of factors, including high inflation, trade deficits, and a growing reliance on computerized trading programs that triggered automatic sell orders. The Federal Reserve had to step in to provide liquidity. As a result, the market rebounded much faster, recovering its losses within 2 years by 1989. Dot-com bubble, 2000. During the late 1990s, tech stocks surged as investors poured money into internet companies, many of which had no profits or even viable business models. By March 2000, reality set in as the Nasdaq collapsed by 78%, falling from 5,000 to just 1,100. Major companies like Cisco and Amazon lost over 80 to 90% of their stock value. The crash led to a widespread economic slowdown and bankruptcies across the tech industry. It took the Nasdaq 15 years to fully recover, only reaching its previous high again in 2015. September 11th, stock market crash of 2001. The 9/11 attacks caused a sharp stock market drop due to fear and uncertainty. The NYSE and Nasdaq were closed for 4 days, reopening on September 17th, 2001, with stocks immediately plummeting. Stock market drop. The Dow Jones dropped 14.3% in 1 week, losing $1.4 trillion in value in a matter of days. The worst hit sectors, airlines and travel stocks, were hit hardest, with American Airlines and United Airlines falling over 40%. Recovery. The market rebounded within a month, and by 2002, it had stabilized. The 2008 financial crisis. The 2008 stock market crash was triggered by the collapse of the U.S. housing market and reckless financial practices. Banks issued subprime mortgages to borrowers who couldn't afford them, leading to a housing bubble. When the bubble burst, major financial institutions like Lehman Brothers collapsed, and panic spread through global markets. The S&P 500 fell 57%, wiping out trillions in wealth. The market bottomed out in March 2009, but recovered within 4 years, reaching its previous highs by 2013. COVID-19 stock market crash 2020. The COVID-19 crash was triggered by the global pandemic, lockdowns, and fears of an economic collapse. The market plunged rapidly, leading to one of the fastest bear markets in history. Stock market drop. The S&P 500 fell 34% in 1 month, with the Dow Jones losing 2,997 points in 1 day. Worst hit sectors, travel and hospitality industries, suffered the most, while tech and healthcare stocks thrived. Recovery. The market rebounded by August 2020, driven by government stimulus, and reached new highs by 2021. I'll be making more videos like this, so like and subscribe to see them.